Hello, 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 everyone. Happy Wednesday. How's everybody doing for Trade War Wednesday? Good morning, Patrick. Good morning, Sterling. Thank you for putting in the information, Sterling. Where do we say good morning, Royal Palms? Good morning, John. All right, good. Hey, there's John again. Hey, Andrea. Thank you for tuning in. Good morning. Byron, thank you for being a Slice subscriber. Good morning, Mike. Double bottom on QQQ. I'll go over the futures a bit. Good morning. Thanks for being here, Options 22. Good morning, PMG. Good morning, McRangers. Good morning, Heinrich. We don't know if it's. I don't think China's dumping at that extent, though. I don't think it because they'd be having to convert everything to dollars, and based off what's going on with the trade war, that would get really interesting. Good morning, Harold. We still have a flight to safety. We have stuff being unwound. We have swaps and credit spreads. I posted on Slice last night that credit spreads were starting to get interesting. They finally got to the interesting level. Good morning, Anissa. So, it's not that the markets. The markets were retesting the low area for Monday. It's not that that's the issue. It's the constant volatility now. The hedges, again, a lot of stuff that was a stable hedge before is not stable. You don't know what's going to happen next. All right, a constant market decline you can hedge for. Even if you have to pay up to hedge, you can still hedge for it. It's this volatility where you don't know what's going to happen the next hour. That's the problem. The markets are just reacting hour by hour and post by post and interview by interview, and that's what's not good. And, there's ways to get stuff done from my perspective, and this is not it because you can do a lot of collateral damage in the process. And no, I'm not a defender of Wall Street, but you know what? If Wall Street has issues and you blow up stuff, it can have a ripple to everyone. It can have a ripple effects to everyone. And I'm not saying we should step in and save the markets. I think the markets are incredibly overvalued and still need to correct more. However, there is a strategic way to do things, and then there's the chaos way of doing things, and we seem to be in the chaos way of doing things, which is dangerous and can have a lot of collateral damage. Now, we had mortgage information come out this morning. This is going to climb because 10-year yields, what are they back to? 4.4 after getting down to 3.8. So they've skyrocketed. And by the way, the head and shoulders patterns are now done with. I talked about hitting that first target area and then the lower and the stop, and they're now done with. Stuff is blowing up about their credit spreads are tons of high yield credit, tons of pressure on that. Crude numbers coming out today. Crude's hit the next major harmonic area, and crude's dumping like a pretty severe recession's coming in. We got Barkin speaking. Tomorrow, remember, we got the CPI numbers. So far this morning, healthcare is taking the shorts because of retaliatory stuff, and a lot of our drugs come from China. Chips are doing okay. The Mag 7 is holding in there. That's about what's holding up the market. The market has improved a little over the last little bit because now we have basic materials and technology. Gold, when it broke yesterday's high, was a percent B buy setup. Looks like it's going to follow through easily, and a rotation buy setup. Basic materials and technology are leading. Healthcare and energy are down. Now the market is pricing in a first cut in May, followed by 3 more cuts. So they're actually saying, hey, Fed, you need to start cutting. We shall see. Extreme fear down to 3. Oh, boy. And show PE still at 30.74. All right, we had Delta. They did a beat, but more importantly, they pulled guidance. And you're going to see more. Remember, we kick off earnings season on Friday. Okay? So I bet you're going to see more companies pull guidance. So, and today after the close, you have Constellation Brands is the only one I'm going to be looking at. So that's where we sit. Who else? Good morning, Jacob. Thank you, everyone, for tuning in. Thank you, everyone in the background. All right, what patterns do we have? Let's just get straight to the patterns because that's what matters. So, again, I mean, I'm not telling anybody to be a member, but if you are a member, I posted on Slice. I posted again. It's Jim, myself, and Bob all making posts. Uh, I'll still tweet out stuff too, but I went to neutral mode and was watching for any setups down here because again, with yesterday's pullback in price action, we got below this. Well, we closed just above the 62.5 by official settlement, but I went to neutral mode and then started watching for this. First on the daily chart. If you can see this beautiful, it's the most beautiful double bottom ever. That's the bigger picture. That's the only thing that gets me more so bullish, and that would probably require things to get resolved and start heading in the right direction. But that's the bigger problem. That's the bigger pattern, not the bigger problem, the bigger pattern on a daily close above 5,305.25. That would trigger the pattern. It's still against the daily rotation zone. So it is of the lower probability kind. So we got to watch that now. Within that, we now have a potential little 1 hour double bottom. Okay, so this could potentially be if stuff resolves, and especially if we get momentum bars. Like we had yesterday, you got to start. We haven't talked about momentum bars in a while, but once you start getting momentum bars, these are momentum bars where it just starts breaking down. You got like single green pausing bar, breakdown, single green pausing bar, breakdown, followed by just constant. This can happen on the upside too. So if we start taking off, trigger this little double, and it could technically be done on a 15-minute. I'd need to follow through on the 1 hour above 50.5750. That's the thing I'm watching for because we've tried to put in a pretty decent support base. There's a lot of support from between Monday and today. Now, if these areas break, if this breaks down, 47.72 and then major cluster at 47.14 or 47.0, right just in front of 4,700. That's the next key cluster area. If the double were to trigger, the targets are roughly about 51.35, 51.74, 52.13. And if we got momentum, if something happens and something's resolved, or more clarity comes through, then that could be rolled potentially into the bigger double pattern. All right. Would I put VIX, call and put options? That's really dependent on how it can be structured. And it would probably have to be rolled into because of where volatility is right now. So I'd have to really take a close look at that. It could possibly be done, but I mean, you'd really have to make sure your volatility is offset correctly. And it might be better done with single-sided instead of doing iron butterflies or iron condors, just single-sided with all based off puts or calls. Now, NASDAQ also. NASDAQ, this is a potential double bottom. Same pattern, you have the bigger double, and then you have a smaller potential double. This did come down below the 75, so it does qualify. So that would need a close above 17,425, 17,703, 17,843, 17,982, and then you have the potential bigger double, also still against the rotation zone. So these are the times of things if we did rally, I would not get greedy. All right? Would not get greedy, at least be aggressively raising stops. To the downside, we have the next harmonic cluster at 16,231, then 15,984, and again, our still technical magnet price, whether we get there or not, but we still, because Oh, we hadn't closed below the. We closed right at 17,247.25. Hold on. 17,243.75. So technically, we did close below 62.5 on a daily basis, which shifts. We could see more downside ahead. But the first levels I'd be focusing on, if we do, are about the 16,200 area. You're welcome, Andrea. Good morning, Richard. Maybe it will go to zero. No, I don't think we're going to zero again. That was a one-off. It's not going to zero. Not going to zero. That was a blowout with COVID stuff. Okay. Dow, same thing. Daily double. Little minor double pattern would need a close above 38,132, 38,737 first target, 39,040, and 39,342. Now remember, just because we have a bunch of patterns, none of them have to trigger. Or maybe they get invalidated first. Okay, and if they do trigger, really manage stops on them, because who knows what could come out on a social media post an hour after the open. Who knows what that can be said. You can't just take this stuff for granted and say, I'm going to take a nap. That's not the markets we're in. 38,340 on the downside. Your major level, these are the minor levels. The major level, those 35,650 area. The Russell has a little minor double also. I'd be looking to the NASDAQ potentially first. The Russell, unless things really get resolved, would be the last one I'd be looking at, unless you have tons of capital to put everything on and manage with everything else going on. I mean, sometimes you have to pick and choose which trades you're going to do. So if I was having to pick and choose, the Russell would probably be the lowest of the boat. But high of 1779.8, so roughly close above 1780. 1812, 1827, 1843. By the way, this is way too. This is a really interesting. You can't trade this as a daily double here because it has to be from this spike high, which makes it really lopsided and a long way off from triggering. So I'm not even going to put that on there. The VIX starting to pull back a little with a little market strengthening in. There's a little mini double pattern right here. You see here, little mini double pattern. And again, you can use patterns on this, which could take it back to the low area from Tuesday. And then technically, you have the bigger potential double pattern also, which if that were to collapse below these lows from Tuesday, you'd probably see that would mean volatility is getting unwound. You'd probably see the markets doing a major snapback rally and those daily doubles getting triggered. The DAX, nothing great yet. This is not in potential double bottom territory just yet. We can double check that. Maybe I'm wrong, but I don't think so. Yes, no, I am wrong. So you do have, this is again another lopsided one. Very lopsided. Lowers the probabilities, but you do have then a double within a very sloppy double, because this is a triple now in the 1 hour. So on the DAX thing, it would have to confirm with a 4-hour close. It would have to confirm with a 4-hour close for the little mini one. Now this is significant. So the notes, these are the note futures, not the micro yields. The notes futures hit the stop reduction. Still not technically stopped out. Still not technically stopped out. 109.27.5 is the key level for anything on a stop raise, if that's the technical invalidation point. But look at this collapse over the last 3 days. And here's the yields, which I already talked about yesterday, was close enough to at least raise a stop. We spiked above that 62.5, but are pulling back. So no technical invalidation yet, but fairly close. If we do close above 4.45 roughly, the potential downside is over, but not looking good for that. Dollar index, going to be watching over the next day or so. Let's see where we sit. 101.46, 10, what's the low? 101.47. So technically not quite a double yet. But we'll be watching to see. That does not mean it ever has to trigger, but that's what I'm watching for. If we do break below last Thursday's lows, major level is this 99.75. Crude bounced off the harmonic cluster this morning. So with 4-hour cycles at the bottom and we're getting divergences down here, we could see at least some kind of snapback rally into the 4-hour rotation zone. And we are getting overextended. But that would be a bounce back move only, not a long-term pattern. Gold, again, was watching we reset against the weekly rotation zone. I've talked about that also in here. Yesterday, we set up a bar with a potential percent B buy. So I was watching the high and a rotation back up above that high, which we've got today. So as long as it closes above yesterday's high, which yesterday's high was 30.38, roughly 30.37.9. My first key level on this is for follow through and a close above 31.12. That would close it back above the 62.5, and that would be the first area I'd at least look to raise a stop on any short-term gold longs. Oh boy. Yen moving back down, finally connected to 75% harmonic. Still magnet price is 142 roughly. Euro, going to be watching to see if we're up against the 87.5 area again. But this, I'm paying more attention to the dollar if it forms a double and then triggers it. Spiders, look on your patterns for the futures. But if you're trading just off the spiders, you do technically. It's sloppy because it's spike high, but you do have a 4-hour potential double right here. Would need a close above 524.99, so close above 525. Would feel filling the gap then. Also, if that were to trigger, so there's your key pattern right there. 542, roughly 543, 551.85, 580.80. And you also have a gap left behind last Wednesday. So that could be a potential gap filler for your spiders. All right. On your lower moves, the major, since we did get a pausing bar, the major harmonics, if we do break down below Monday's lows, the next major harmonic area is 460.22 to 465.37. That's your major harmonic area. Would have to be fine-tuned on the next push down. The Qs, here's your pattern also. It's sloppy because of these two spike highs, but let's just do the bigger breakdown pattern first. Hold on. Let me do before I reset it to the double pattern. If we did break down, your next harmonic level is 392 roughly, and then 385. The double pattern, just verify it. Yep, we are below 75. So your double pattern would be a close above 443.13. Targets just above, what is that target? 459.79, 486.13, 476.46. You see we got the multiple gap fills. So that would be your bigger picture targets on your Qs as well, should a bullish trade unfold. Bitcoin trying to form another mini double right here. Lopsided, but if we do get a rally and Bitcoin can close above 81,223, you could see a little return to the most recent high area of resistance. When I was talking about, here's your high yield spreads. You can see with yesterday's price action just going through, and this is here, you can see it on the weekly. So this is getting up to some we broke above major resistance. We actually got above the levels from October of 23. Remember when we formed our last substantial bottom? Remember, we started a big rally at the beginning of November, and now we're actually back above those levels. So we're not yet anywhere near the COVID levels, but we are. There is starting to get some upward pressure on that. Definitely. What if another pandemic were to hit? We're not going to throw that in the mix now, too, Rich. Trump is Trump. That's all I can say. That's all I can say. Service tariffs on call centers are next. We're just in the whole. I don't know what's going to happen. The volatility, this is some of the most insane, not from volatility. I mean, I've seen volatility spikes before, but the intraday volatility with the constant swings back and forth is some of the worst I've ever seen. And I've been doing this since 92. That should tell you something. All right. Tesla still has its little mini bigger double in play. NVIDIA. I mean, there's some stuff starting to rush into chips this morning or into some of the mega caps. But you know what? I need to see some real strength come in besides buying the dip. You're welcome, Options 22. Always keep us level-headed. Yes, you got to be level-headed, and you have to analyze, especially now, both sides of the market. Don't put on one-side goggles. We can't, because who knows what the next tweet or the next post is going to be. Who knows? So that's why now more than ever. And watch the patterns. Doesn't mean they're guaranteed. Like, yeah, we get some of these little mini doubles trigger, and then you get a post of, oh, screw everyone, we're going to 500% tariffs. Yeah, and then who knows? Or it could be, just kidding, I'm going back to 10% tariffs. So everybody's negotiating with me, I'm going back to 10% tariffs. And the market could go on a major rip. Who knows? I don't know. I'm just prepared for chaos mode and got to trade the patterns and stay on top of it. Lots of folks pulling money out of 401ks right now. Well, it depends on where you are in your retirement cycle. I mean, if you're like close to retirement and you want to lock in, I mean, remember, here's your monthly chart. Look at your monthly chart. I mean, yeah, we've pretty big drawdown, but we're trading back against the highs from February 22. Look at you. Yeah, you've given back something, but if you've captured a lot of this run up and you need the liquidity and the cash, fine. But if you're like 10, 15 years from retirement, I wouldn't be bailing. Wouldn't be bailing on a 401k. Again, I told you, we had those double tops that triggered, and then we've hit some of those. We had warning signs that this was coming in. Now, we will get rip your face off rallies. I'm going to tell you right now. I don't know when it's going to happen. We have to follow the patterns. We will get rip your face off rallies. But I don't think we're out of the woods long term yet, even with rip your face off rallies. Okay? That's something to keep in mind. If we repeat something, hold on. Remember, I'm not saying this is going to happen, but remember, we had rip your face off rallies. I haven't talked about this in a while in the .com bust, but look, it took a while to unravel. And look at some of these rallies. Just want to point this out, especially for newer people. So we had a key sell-off. Did I not put that on? All right, look at this. Look at this. Look at this rally back up. The futures actually didn't regain the 62.5. The Qs did, but the futures didn't. But then we rolled over again. So within this, from these lows to these highs, look at that. That was a 64% rally. Everybody thought, all right, the worst is over. Boom. So this is what I'm saying. I don't know if we're going to, I don't want to get overly complacent even on rallies in this kind of market. And then the next decline, the next major decline was another 67% from that little bounce. I'm not saying that's going to unfold, but don't just, this is where sometimes the buy the dips can get crushed. And then when they have to unwind, because you can only buy so many dips. I just want to point that out to newer people. I know some of the people who've been in this longer. You know, that's why look at the terror we've been. So let's say we do have a nice a 67% rally. Let's just hypothetically say, where would that take us? I mean, look, we could have let's just go off a 30% rally. That could take us back to near the recent highs and form a bigger, massive topping pattern. If we rolled over from there, don't know. But you got to manage the patterns and manage your portfolio, and now would not be a lot of time to just pile on risk. You want, if you're going to buy dips, you have to strategically learn to play the patterns from my perspective. And those are patterns. It doesn't mean, let's say somebody's unfold like in the Qs. It doesn't mean we're going back to all-time highs. It does not mean that. It doesn't matter whether he goes to 400 or 1,000. It doesn't matter. Stuff's already with 100%. You don't think that's going to disrupt stuff already? It doesn't matter. Check on the XHB. Let me just get this back to some. Oh, that was over here. Hold on. There's the XHB. Remember I talked about I'm really watching it to come in with this 82, 87 area. I've just not updated this on this platform. So there we go. That's why, again, it's a pattern. And they're not always all going to work. All right. You're welcome, PMG. So that's just be cautious. Yes, be prepared for the rallies. Also be prepared for rollover dumps. We do not know what's going to happen. With that, we're at open. Let me get back to open. Sorry about that. I got multiple charts set up here. Let's just see. So again, nothing's really changed. Just going to keep an eye on this. I just want to see where the tick opened. I want to see where the tick opened. Nah, close to that. All right, bouncing back. So get the same thing. I'm going to watch to see on this roll, on this rally, if we triggered a pattern. If not, I'm going to be watching for the next rollover to see if it takes out the most recent lows. All right, have a good time at Jiu-Jitsu. Thank you for everyone for tuning in. I shall see everyone tomorrow. Bye for now.